China has long been one of the world's largest importers of iron ore, with an annual demand of up to 1 billion tons. But its domestic annual production can only meet about one-third of the demand, about 300 million tons. This means that China still needs to import about 700 million tons of iron ore each year. In the past, Australia has been one of the main sources of China's iron ore supply. But in recent years, against the backdrop of tense Sino-US relations, Australia has taken a series of sanctions coordinated with the United States. These measures have caused iron ore prices to soar from $80 per ton in 2021 to $150 now. Faced with this challenge, China has begun to seek to reduce its dependence on Australian iron ore and turn to other parts of the world to explore new sources of iron ore. Africa, a resource-rich continent, has naturally become a focus of China's attention. In recent years, China has increased its investment in Africa, especially in the field of mineral resources. In 2015, China's huge investment in the Democratic Republic of the Congo included the construction of 300 kilometers of roads and more than 120,000 square meters of construction facilities in exchange for the right to mine the country's world-class copper and cobalt resources. Recently, China has embarked on the development of another large iron ore project in Africa, which has ore reserves of up to 6 billion tons. It is predicted that this project will allow China to no longer worry about iron ore supply in the next 10 years, thereby reducing its dependence on Australia. So what exactly is this potentially transformative project? As one of the largest countries in the world, China not only plays an indispensable role in the world economy, but also has rich natural resources. For example, China's coal reserves are as high as about 111 billion tons, accounting for about 14% of the world's total reserves, ranking second in the world. In terms of titanium resources, China's reserves are close to 200 million tons, accounting for 25% of the world's total reserves. In addition, China's rare earth resource reserves account for 37% of the world's total, ranking first in the world. Despite its rich resources, China still faces shortages in some key mineral resources. Therefore, China searches for and invests in mineral projects around the world every year to ensure a stable supply of resources. In June 2020, China successfully obtained the mining rights of the northern block of Angola's Kasoka for $16 billion. It has one of the world's largest and highest quality undeveloped iron ore mines with iron ore reserves of more than 2 billion tons. In October 2021, China obtained the mining rights of Gabon's Belob iron ore mine for $2 billion. The mine is one of the world's largest proven magnetite resources that meets JRC standards, with reserves of 1 billion tons. These investments have enabled China to obtain about 100 million tons of iron ore per year, effectively alleviating the pressure on domestic iron ore demand. Recently, China has also invested in an iron ore project with a reserve of up to 6 billion tons, which is expected to meet domestic iron ore demand in the next 10 years. This iron ore project is called Mbala-Nabiba Iron Mine, located on the border between Cameroon and Congo. Mbalam is in Cameroon and Nabiba is in Congo. According to China's exploration data, the iron ore reserves are estimated to be 6 billion tons, mainly hematite, with a grade of 33.4%, of which 805 million tons are high-grade iron ore, grade 57.3%, making it a world-class large-scale high-quality open-pit iron ore. Cameroon is expected to have 4 billion tons of resources, including 260 million tons of high-grade iron ore. Since May 2022, China and Cameroon have cooperated on this project. The cooperation agreement includes the establishment of an iron ore beneficiation plant, a 20-kilometer-long ore pipeline, a 60,000 kilowatt power plant and a dedicated ore terminal in Cameroon. China also plans to invest $700 million to obtain mining rights. The project encountered obstacles in the early stages due to land expropriation and environmental assessment issues in local communities, but after continuous efforts and communication, on December 22, 2023, the Minister of Mines of Cameroon announced that the project was officially launched in the border area between Cameroon and Congo. With the commissioning of the Mbala-Nabiba iron ore mine, China's iron ore supply situation will change. The project is expected to provide China with 50 million tons of iron ore per year, including 4 million tons of high-grade iron concentrate, iron content exceeding 60%. Previously, China's steel industry has long faced the problem of unstable supply of high-quality iron ore. Now, the investment in this project will increase the development speed of China's steel industry by 10%. The mine is expected to have a 30-year mining period, ensuring China's stable iron ore supply for at least the next 10 years, enhancing resource security and sustainable economic development. It is worth mentioning that with China's new dynamics in the iron ore market, some traditional suppliers such as Australia have expressed concerns about this change. What is going on? Before 2024, China has been the largest buyer of Australian iron ore, with annual imports reaching 600 million tons. However, due to the pro-American policy of former Australian Prime Minister Morrison in 2021, the Australian government imposed a series of iron ore export restrictions on China and increased tariffs. This has led China to gradually reduce its iron ore imports from Australia and begin to seek other sources. Although the new Australian Prime Minister Albanese lifted these measures in 2022 and visited China in November 2023 to try to repair bilateral relations, the iron ore trade volume between China and Australia has not yet fully recovered. In 2023, China's imports were only 400 million tons. In addition, as China obtains the mining rights of the Mbala-Nabiba iron ore mine, it is expected to further reduce its dependence on Australian iron ore, which will cause more than $10 billion in losses to the Australian economy each year. It is worth noting that Australia's Sundance Resources Company, Limited was the first developer of the Mbala-Nabiba iron ore mine. The company signed cooperation agreements with the governments of Cameroon and Congo in 2012 and 2014, and planned to invest $8.7 billion Australian dollars in mine and infrastructure construction. The initial annual mining volume is expected to be 40 million tons for 12 years, and the second phase will increase to 35 million tons of high-grade iron ore per year for 15 years. This project could have brought Australia $3.5 billion in annual revenue and consolidated Sundance's global market position. However, due to Sundance's poor financial situation and lack of sufficient funds to support the development of the project has been difficult to progress. Although the company tried to cooperate with another Australian company, Oceano, and invited Chinese companies to participate in the construction, the cooperation failed after 3 months of negotiations. After the failure of the negotiations, both Sundance and Oceano faced severe challenges. In December last year, the two companies were forced to withdraw from the Australian Stock Exchange due to financial instability. This not only disappointed investors, but also raised widespread doubts about their management and decision-making process. In addition, Sundance's projects in Congo and Cameroon have been stranded for a long time, causing dissatisfaction among the two governments. On November 30, 2020, the Congolese government even announced the cancellation of Sundance's control over the country's iron ore and handed over the project to Chinese companies. In the past few decades, China's investment and aid in Africa have always been the focus of international attention. Compared with some Western countries, China's African cooperation projects not only reflect its commitment to African development, but also achieve mutual benefit and win-win results for both sides. This cooperation model is an important reason why more and more African countries are willing to work hand in hand with China. Against this backdrop, I am optimistic about the prospects for cooperation between China and Africa. What do you think?